Let's talk about the banks for investors thinking about putting money to work there. The KRE Regional Banking ETF is trading close to $44 a share, near the levels from March when Silicon Valley Bank first collapsed. It was above 60 before then. If there's no contagion issue and the commercial real estate troubles are contained, well, what other hurdles are there? I've been poking around on this for a few months. There's something interesting happening. Large banks are increasingly using technology partnerships to try to capture the customer base of the regionals. We have a sizable one to share with you right now. JP Morgan Chase teaming up with fintech software provider Gusto. It's a startup to offer payroll to some of its 5 million small business customers. I spoke with Gusto CEO Josh Reeves.
So payroll, as everyone's aware, is not just about money movement, but is also about all the different tax rules and tax compliance. And because you have local, state, and federal rules, you have over 10,000 different rules out there, right? So this can be at the county level, it could be at the state, city level, various different places, not just the IRS. And all of these are calculations, but it's not just the calculation side. There's also lots of different documents, filings, reporting that has to be done as well. And small businesses typically are doing this by hand. So they get, they make mistakes, they get fined, and it's just something much better done in software with modern technology.
So what does this move mean for the regional banks? Will the larger banks, which have big tech budgets, steamroll them and force a wave of consolidation? I asked another startup, Eric Glyman, CEO of fintech spend management startup Ramp, which last month raised $300 million at a $5.8 billion valuation. Listen.
We're still very early in doing it, and I think that's one of the large initiatives for us. And I think you're exactly right. When you look at regional and community banks, the budget that they can put into technology investment versus, the JP Morgan Chases, the Citis, the Wells Fargos of the world, which are billions to tens of billions per year in investment, I think it's a very challenging place. And when I think about just the United States at large, I think it's a scary thing if regional banks are not able to compete.
So Reeves, back at Gusto, said the larger banks might spur the regionals to action here.
I think this is a great catalyst. It's a good forcing function, but time is of the essence, right? These experiences being made better, more modern, customers benefiting from having better user experience, easier to use systems. And again, a lot of these regional banking partners are not going to go build a lot of that tech in-house. So working with partners, whether it be Gusto or other parts of the stack, I think is very much the future. And the good news is there's companies like Gusto and others really focused on wanting to work with banking partners of all sizes, frankly.
So it's important for investors to figure out how big is this trend. Could it affect whether regional bank stocks rebound from the March tumble or go even lower? Joining me to discuss, CNBC banking reporter Hugh Sun. Hugh, great to have you here. You talked to Josh too. Yeah, what do you think?
Yeah, this is a great angle, John, because this is part of the bigger picture here that regional banks face, right? We know that post-SVB collapse, they're going to face greater regulation. That's coming down the pipe. We know that they're already having this profit crunch because of the greater funding costs that they're facing. And now they're facing JP Morgan in payroll processing. Now, JP Morgan has a $15.3 billion tech budget. And, it's impressive. It's a little bit inflated because half of that roughly is, business as usual, like paying engineers to keep the lights going, part of the empire. But about half of that is innovation. And so, they're really facing, this incredible pressure coming from the folks of JP Morgan, other folks. And when you think about it, this is another story, another angle into the story is JP Morgan is doing this because why? Because the likes of Square and PayPal have led the way with innovation. They've created these fully enclosed ecosystems for their merchants. And JP Morgan is saying, I'm going to be a fast follower. And by the way, we're going to still be years ahead of the regional banks.
There's so many players here, and investors can really think about what they expect to happen, who they expect to win. I'm used to the narrative of the big banks versus the fintechs. But now we've got a narrative of banks plus fintechs and who's going to be able to choose the right partnerships and integrate most quickly. What's the impact of this, do you think, on the smaller banks and the consolidation that so many expected to see after SVB?
So it is they're getting it from both sides, John. They're getting it from the fintech players who can operate in any state in the country. They're getting it from the big banks. And so this is one of the reasons why the thesis out there is that there will be consolidation at some point. There's just too much pressure on them. Will it be immediate? No, because they need the green light from regulators, and there's still a lot of pressure from folks like Liz Warren, Senator Liz Warren, who's against these kinds of tie-ups. But the pressure is there, and I don't think it's going away.
On the fintech side, you see any likely winners?
Well, ADP is a legacy player. Intuit, there's these huge players. They deal with corporates. You have smaller folks. You have Gusto. You have a few other players in that space. I think those guys are going to be the winners. They're gaining share really fast.